Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hello Lauren.
Hey everybody.
Getting close to the new year with the holiday season, and I thought we would do a two-part series to take us into the year 2013, assuming that the world is not ending with the Mayan calendar.
Right.
So Lauren, I found I always like to read what people read in newspapers and other media type outlets.
And you don't get too depressed?
No, I don't.
Okay.
I take everything with a grain of salt.
Okay.
But this one was interesting because it was called, this is USA Today. It's called 13 Investment Themes for 2013. And so for part one, we're going to do some of their, maybe half of their themes, and then we're just going to kind of discuss if we think it's a good idea or a bad idea and why. And then the second half we'll do the other half before that, and that'll take us into 2013.
Okay.
So the first one is this is talking about how to invest. Fill up on domestic energy shares. So what they're saying is that you should be moving moving a portion of your portfolio specifically to energy shares because they think that's going to be a good investment return.
This is their first piece of advice? Oh boy. Well, I don't think that trying to predict which sector of the stock market is going to do well has ever really worked too well for anybody ever at any given time. I mean, even if they know because of some reason, and maybe they do, that energy companies are bound to do well next year. The problem is if they know it, everybody else knows it.
Right.
So whatever you could get from that, the stock's already gone up.
The reason I don't like it is because it takes away that you're trying to market time a certain sector.
Yeah, exactly.
And a different way of what you just said, and it takes away from your overall diversification of your portfolio. Okay, here's number two. Treat garbage as treasure trove, and basically they're saying that garbage and sanitation business is a growth business, so you should allocate this sector. You should allocate more to this sector because they smell of an opportunity.
Who knows? Maybe. I mean, I don't think that's a good. They're not all 13 different sectors, which all add up to the total stock market, though.
No.
Okay. No, that doesn't. That's the same reason why that doesn't. That one doesn't make sense.
Yeah, they like what I mean. Basically, they're saying they're again trying to say pick a specific sector.
Right. Yeah.
Number three is circle back to China. Even though China did not fare well in 2012 as an investment return, it's regaining strength and it could see growth again next year. So we should move more money back into China.
If the only way I could agree with that is if it's just part of generally, a lot of people only own U.S. stocks and they need to own some international. If you just mean that generally it's a good idea to diversify internationally, which a lot of people have been afraid of lately, I could agree with that. Yeah. Specifically China, that doesn't make any sense.
So I think the way that we manage our portfolios for our clients is we sort of partially agree with this. And the one difference is we've always been investing in China for a very small portion of our portfolio.
Right.
And even though that part of the portfolio may have slightly underperformed compared to some of the other asset categories, what we do is we've always been invested, but we're just rebalancing back into that portfolio.
Right.
So okay,
exactly.
Very good. Okay, this one is don't give up on dividend payers. So despite the fact that the tax policy could change on dividends, they say don't give up on dividend stocks because the tax rate might be higher. And
actually, I'd agree with that.
Yeah, I would agree with that advice. If that's not, the tax policy is not a reason to move out of a sector.
Right.
Okay. Number five, cozy up to companies with free cash flow. So they say basically allocate. Rotate your investments to companies that have lots of cash reserves.
That doesn't make any sense. There's just that's one factor that even if we were going to pick stocks, which we're not going to pick stocks, that's just a completely random measure that could signify anything.
Right, I agree. I agree with that 100%. That's just that's like basically saying, okay, you're gonna marry a woman for for a piece of clothing she wears.
Right. Yeah.
Sound right, but that's what. Okay, last one we're going to do for this episode. Seek stocks with the bulk of earnings abroad. So the bulk of their profits are coming from abroad.
That doesn't make any difference either. You're much better off just internationally diversified.
Right.
So far, they have not done well with it this year.
Maybe 1 out of 6.
1 out of 6.
Okay. All right, we'll end this episode of Erickson TV, and we'll see you next time. Happy holidays, everybody.
See you next time.